it is the yes, it is the mechanism through which the funds flow from the surplus units and the deficit units and the economy. The meaning of money market. What is the money market? Financial markets are functionally classified into the two types of the money market and capital markets. Money market is the short-term capital gains like related to this one, and capital market is the long-term markets. Wait. 1 minute. Okay, yesterday I complete this topic. Now here, today is the advantages and development. Capital money market, Indian capital markets. So money market and capital market. So capital market in India is a market refers to all facilities in institutional arrangements for the borrowings and the lending the long-term funds. So capital market does not mean dealing with the capital goods, but it also is concerned with the raising of money capital, demand and supply of the funds. An ideal and perfect capital market is aim is between the demand and supply of the long-term funds. It's the main. So demand and supply of the capital long-term funds. So first, what a demand for funds. In India, the demand for the long-term money is capital comes mainly from the private sector, manufacturing industries, and from the government related needs to the economic development and to a very small extent from the agricultures. Next, the supply of funds is the supply of funds for the capital market comes largely from the individual savers, a bank specialized and financial institutions, and the government among the institutions, the commercial banks or LICs, Life Insurance Corporation of India, and private provident funds of the government sources, and other a number of special institutions set up by the independents, such as the private sectors or finance corporations or others. It's the functions and importance of capital market. What are the functions of capital market? So, the capital market play a important role or key role in the mobilizing resources and developing country into the production, and in this way it facilitates and promotes the process of economic growth in the country. Various functions and significance of the capital market. Uh, they are given some important functions in capital market. Link between savers and investors. So, a capital market is a mediator between investors and savers. So, the capital market function as a link between savers and investors. It plays the important role in the mobilizing the savings and utilizing of the savings money. Next is the encouragement to the second function is encouragement to the savings. So the savings encouragement means here with the development of capital market, the banking and non-banking institutions provide the instruments which encourage the people to save more money in, and less more money. That's enough. That is the second important function of the capital market. Then third one is encouragement to the investment. ఇన్వెస్ట్మెంట్ అంటే సో ఎవరైతే ఇన్వెస్ట్మెంట్ చేయాలో సో వాళ్ళకి ఎంకరేజ్మెంట్ చేస్తుంది ఎలా చేస్తుంది దే మొబలైజ్ ద ఫండ్స్ సో ద క్యాపిటల్ మార్కెట్ facilitate lending to the businessman and the government and the encourage investment. It provides the facilities to banks and bonds and securities and non-financial institutions. Next, fourth important function is promote the economic growth as well as the capital market not only reflect the general conditions of the economy but also smooth and escalator of the process of economic growth of the country of the certain area. Next, stability in society, the security prices, stability in securities or prices. The capital market tends to the stabilize and values of stock and securities and reduce the fluctuation of the rates or securities rates. Next, the sixth benefit is sixth function is benefits to the investors. Benefits to the investors. The capital market helps the investors, those who have funds to invest in the long term, a long period financial assets. So, if any ways, it brings to the more buyer and seller the securities more prices in the profitable prices. Next, Indian capital market after independence. So Indian capital market can be divided four categories in four types. One is the government securities, second one industrial securities, third one is the development financial institutions, and the intermediates. Financial intermediates means here like a like a private organization or other companies bring from suppose ఇక్కడ మనకి ఏం చేస్తున్నారు రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియన్ లార్జ్ అమౌంట్ తీసేసుకొని ఏం చేస్తారు సో దే develop the small scale industries and other persons. Again, industrial securities can be divided two types, new issue market and old issue markets. Again, financial intermediates is examples of the financial institutions or financial intermediate organizations is merchant banking, so mutual funds and leasing companies and venture capital and others. So ఇక్కడ మనకి growth and saving of investments. Next, capital market in India. Okay. Structure of Indian capital markets. Structure of Indian capital market. Capital market is a build and securities market, the industrial securities market, and development banks and financial services. In industrial securities can be two primary and secondary investments and development banks. So your development banks play a key role in the any economic development of any country and any industrial developments or production, etc. So here in development banks, IFS, IFI, Industrial Finance Corporation of India, IDBI, Industrial Development Bank of India, ICICI, Industrial Credit Investment Corporation of India. It is a special for the development of industries. SFC, State Finance Corporations, UTI, Unit Trust of India, and LIC and GIC. So LIC is you know that are well known the Life Insurance Corporation is the mobilizers funds and the support to the government. GIC, General Insurance Corporation, and others. Others means here private security, private companies, private organizations comes under others activities. And financial services. This is very, very important that key role in the financial mobilization or finance moving to source and applications like that. So one is the financial services. First one is like banks, merchant banking. Merchant banking means who do the business. Everything business they are given the small and medium and long term, small and medium term loans. So like leasing. Leasing means it is also one type of securities, factoring and venture capital, mutual funds and others there. Next, types of securities. Securities can be divided three types: ordinary shares, and second one preference shares and debentures. And it's the mobilization of funds in the any company, any long-term business. Ordinary shares means equity shares. Who okay. Types of securities can be divided three types: ordinary shares, preference shares, and debentures. So ordinary shares means equity shareholders. So it is an ownership of security. The investment is capital investment. instrument. It is a permanent but highly liquid. Second one is the preference shares. Preference shares, it is an ownership security like an ordinary shares, but carries a fixed rate of dividend with the preference shareholders. Next, third one is debentures. Unlike it is a two types of debentures, securities, debentures. Like a debenture is a long-term debt. They get the sum rate of interest on certain time. After some maturity time, the repayment of all debentures, they redeem the debentures. In a secondary market, like a secondary market comes under stock exchange. In stock exchange is an market where the stocks, shares, and securities are bought and sold area. It is a market where the owners of securities can dispose them of as they desire. Stock exchange, a stock market, has a both primary and secondary market segments. The stock exchange is an organization in systematic buying and selling of the shares and debentures, any other paper, non-cash transactions. Next, role of the function, stock exchange in development of country, as well as organized stock exchange, perform a number of useful and functioning functions in an economic in development of any country. Important among the they are given some important roles. Number one, an organized stock exchange operating under the well-defined rules and regulations minimize the dangers of the speculation dealing and the price manipulations. Stock exchange provide a ready-made market, trading securities, and in this way of capital is made more mobilized. Stock exchange helps in determining the prices of securities. Stock exchange enable the business firms to raise the large volume of funds from the market. So stock exchange increase the credit worth of the business and enterprises, etc. Next, a competitive and the efficient stock exchange act as a barometer of the business sound of company. A competitive and effective exchange act as yes, unit is the first one. Amma. Okay. Next,
Okay, okay, sir.
listing of securities. Yes. Money market introduction related one. Okay. A listing of securities. Sorry. Next, capital market reforms. Capital market reforms. With a view in the introduce the improved with the with a view in the introduce of improve the practices and a greater transparency in the capital market of as a SEBI. SEBI means Stock Exchange Board of India, and the government has initiated the process of capital market reforms since 1991 to 91-92 year. The important capital reforms are there given some. One is the CCI is abolished. So CCI means Capital Issue Control, CCI. So Capital Issue Control Act 1947 was replaced in May 1992, and the Office of the Controller of Capital Issues. CCI means Controller or capital issues. Next, second statutory status to the SEBI. So previous 1992 before మనకి ఒక separate organization just undertaking government చేసింది. After 1992, it is a separate statutory organization. It is the SEBI. Next, regulation of stock exchanges. So rules and regulations framed by the SEBI. Next, uh, permission of the FII. So FII means the foreign institutional investors have has been allowed the access to the Indian capital market. Previous ఏం చేసే వాళ్ళం ఫారెన్ వాళ్ళు కాకుండా ఓన్లీ ఇండియన్ క్యాపిటల్ మార్కెట్ మాత్రమే. So after 1992 they allowed the foreign investment institutions కూడా అలా చేస్తున్నాం. Next, norms of the NRIs. Investment norms for non-resident Indians also invested in the our stock exchange, yes, SEBIs, are our Indian companies or any purchase and sale of the business. Next, permission to Indian companies. Indian companies have been permitted to raise the capital for modernization and important recruitment in the international capital with the permission of Reserve Bank of India. Next, set up the NSE. So set up the NSE. NSE means National Stock Exchange, and over the Counter Exchange of India started the functioning with a nationwide stock trading and electronic display, clearing and settlement facilities. Primary market recourse, that is no need. Next, one more important question is this is important. The difference between money market and capital market, the differences. So what is the money market? What is the capital market? What are the rules and regulations in money market? What are the rules and regulations in capital market? What are the functions of money market? What are the functions of capital market? These are the differences between money market and capital market. I'm given one by one. So it is a money market. It is a market for the short-term funds for the period of not exceeding 1 year. So money market అనేది short-term loans providers it is not more than 1 year. But in capital market is exactly opposite. It is a short-term and it is long-term funds. It is more than 1 year. This is the first difference between money market and capital market. Second one is money market supply funds for working capital. Money market supply for only working capital. Working capital means current assets related to the current liability related. Working capital. What is the working capital? Working capital is total of current assets minus total of current liabilities. This is working capital. So money market provide the working capital related funds. But here in capital market provide purchase of it provides funds for fixed capital needs to trade and commerce as long-term requirements of the government. This is the second difference between money market and capital market. Now, third one. So, money market. The instruments are bills of exchange, treasury bills, commercial paper, certificate of deposits comes under money market. Bills of exchange, treasury bills, commercial papers, certificate of deposits comes under money market. But in capital market, it deals with shares, bonds, debentures, and government securities. అంటే లాంగ్ టర్మ్ కాబట్టి మనకి ఇవన్నీ వచ్చేస్తాయి. ఏవేవి వస్తాయి క్యాపిటల్ మార్కెట్లో? షేర్స్, డిబెంచర్స్, బాండ్స్ అండ్ గవర్నమెంట్ సెక్యూరిటీస్ కమ్స్ అండర్ క్యాపిటల్ మార్కెట్. ఇక్కడ ఏమొస్తాయి? ట్రెజరీ బిల్స్, బిల్స్ ఆఫ్ ఎక్స్చేంజ్, కమర్షియల్ పేపర్స్ ఎక్సెట్రా. Next, this is a third difference between money market and capital market. Now we are going to fourth difference. The money market. The instruments are high value of the minimum 1 lakh rupees. So, ఇక్కడ మనకి share in capital market, share may be minimum 10 rupees, maximum is the minimum share value is 10 rupees. In debenture value అయితే ఒకవేళ 100 rupees is the minimum rates. Next, in money market, the central bank and commercial banks are the major institutions who provide the money market, who manage the money market means central banks or money, and commercial banks manage this money market. But here, development capital market, development banks and investment companies play a major role. So that is a capital market. Next, money market. Money market instruments do not generally have a secondary markets. Generally, money market అనేది secondary market do not have a secondary market. But in capital market, instruments have secondary markets or stock exchanges. అంటే క్యాపిటల్ మార్కెట్ అనేది ప్రైమరీ మార్కెట్ అవుతాయి, sorry, money market is the primary market of the capital is a secondary market. Next, in money market, there is no formal place translation are done over the phone. అంటే ఇక్కడ మనకి పర్టికులర్ ప్లేస్ అనేది అవసరం లేదు. దేనికి మనీ మార్కెట్ త్రూ ఫోన్ ఇంటర్మీడియట్ లా డైరెక్ట్ ఆన్లైన్ వెళ్ళిపోతుంది. బట్ ఇన్ క్యాపిటల్ మార్కెట్ we have some specified place. Primary issues are placed in the market through brokers. Secondary market is a fixed place. Next, last difference between money market and capital market is Reserve Bank of India regulate the market. A market, money market is regulated by the Reserve Bank of India, but in capital market is regulated by the SEBI, Stock Exchange Board of India. These are important differences between money market and the capital markets. Okay, clear? Next, 1 minute. Stay on the line. It is not important for governments. Yes. Now, so this is a unit number students, unit number 10, unit number 4, 10th lesson. Unit number 10, 4, 10th lesson, cooperative banks. Cooperative banks is another component of Indian banking system organized with the interact the Corporate Credit Society Act 1904. It is by establishment of credit societies for financing for under agriculture agriculturist. So it is in Cooperative Societies Act 1912 provide the establishment of cooperative central banks by union primary credit societies. So the primary cooperative credit societies are the function at the basis of the cooperative credit system. It may be organized by the 10 or more persons normally belongs to the villages or other starting culture villages. The society raise the funds by the way, share the capital deposits and from the members and non-members and give the loans to the district a loan taken from the district cooperative societies and others are banks. The borrowing powers of the members as well as the society is limited. So district cooperative society is a state. Wait 1 minute. So here, district central cooperative banks is there. The district central cooperative banks is federation of the primary credit societies. Is a specified area is normally in exceeding the whole district. So that is a district central cooperative banks. So within district level one central districts central district cooperative banks. So the limit is within border of the boundary of the district. Next is the state cooperative banks. The state cooperative bank is federation of the central corporation banks. It acts as the watching of the cooperative banks structure in the state. It receives the deposit from the public and formal local bodies and others, municipalities, etc. The boundaries is within border of the state. Cooperative societies are related to the agricultural development banks. Beside the short-term and the medium-term advances to the agriculture farmers require the long-term loans for the effective permanent improvements in a land for the purchase of the pump sets, tractor purchases, digging of the wells, etc. They provide the loans, that is agriculture and rural development banks, meet the long-term credit requirements of the agriculture. It is a two-tier structure of the state cooperative, agriculture and rural development banks, the state level. So this is one more. Comes under NABARD, National Agriculture Rural Development Banks under control. Next, regional rural banks. Regional rural banks is the uh, one is the important banks. It is a development as the major object is the development of rural areas. Okay. The regional rural bank's main object of regional rural bank was to provide the credit and other facilities mainly to the small and marginal farmers, agriculture laborers, and uh, others. So organization, the result by RRB, Regional Rural Banks, established by the sponsor bank, usually the public sector bank. The steering up committee of RRB is identify the districts requirements of the RRB's letter to the central government with the consultation of the state government and the sponsor the bank set up the regional rural banks. Each regional rural bank is separate body cooperate with the perpetual succession, the common seal. Next, capital. That is the authorized capital of the each regional rural bank is maximum is the 1 crore and paid up fees 25 lakhs and 25% paid by the societies of the 50% is subsidiary central government and 15% the state government and 35% by the sponsor bank. At present, the formula of the subscription to the regional rural bank has been exceeding 60 is to 20 is to 20 percentage. 60% is 20% is 20%. 60% is provided by the central government, 20% state government, and 20% is the societies. So management is members there. Next, resources of the regional rural banks. One is the share capital, and deposits capital, deposits from the public, borrowing from the sponsor banks, and the last one is the refinance from the NABARD, National Rural and Development Banks. Okay. Tomorrow is the last unit. That is yeah. Students, anybody have a textbook? Right. Okay, na students. Yes. So ఇక్కడ structure of cooperative banks వచ్చేసి rural cooperative banks and urban cooperative banks. So rural cooperative banks can be divided short term and long term. Again, rural cooperative banks can be divided two types: short term and long term rural cooperative banks. So in short term credit, వచ్చేసి state cooperative banks is 30 days, district cooperative banks and primary agriculture credit societies there. And long-term credit societies see there in state cooperatives again and primary cooperative societies. In district cooperative functions, and this is over now. Next, long-term rural credit is over. Evaluation of cooperative banks as a result of effective steps taken by the government and the Reserve Bank of India. The cooperative banking system in India made tremendous and progress after the independence. The cooperative credit societies was only 3.1% before the independence. After independence in 1951 to 58, it is 15.55 percentage. 61, 62, it is increased by 22.7 percentage. 70, 71, financial year, it is at 23 percentage. So if you compare with after independence, the cooperative societies and corporate banks need is important, very useful to the rural areas. Important of the cooperative banks, alternative trade sources are to the small agriculture, a village, a rural area people, cheap and rural credit. So it is a bank rate of interest is less than commercial banks. Next, protecting borrowings. Next, fourth point is encouragement to the saving and investment. Role of the cooperative banks after 1960 is a very key role, and economic development of India as suitable federal structure of the cooperative banking system. Next, and some weaknesses of the cooperative society there. One is general weakness of the primary agriculture credit society. Second one is problem of overdues. Some overdues are there. Next is a regional disputes, like a regional disputes. Next, fourth disadvantage is benefits to the big landowners only. Next, benefit, last lack of other facilities. So this is the weaknesses or defectives of the rural credit cooperative society banks. Okay. Next class we are learning RRB, regional rural banks and NABARD నేర్చుకుందాం. ఓకేనా? థ్యాంక్ యూ.